Hello students, welcome to the next episode of Mastery in Commerce. Today we are going to study the third chapter, Recording of Transactions Part 1. Now I request everyone whoever is watching this channel kindly like and subscribe it. It gives a motivation to me to work hard and bring my knowledge to you so that it is beneficial for you as well as for me. I also learn the things while teaching. Now, the recording of transaction is the topic which is related to when the particular transactions are done, how we record them in the books of accounts. The first term which we keep on using in accounts is transaction. So, transaction or business transaction, they refer to the same thing. Business transaction means whatever deal of money is taking place. So business transactions are basically exchange of economic consideration between parties. Exchange of economic considerations between two parties. So as we say, one person gives and the other person takes. So that we have to keep in mind. One gives, other takes. So like I am going to the market to buy some goods for myself. So the manufacturer gives me goods and I purchase the goods. Right? So in exchange of purchase, I am spending money, he is earning money. So money is added to his account and deducted to my account. So this is basically the fact lying behind the transactions which are taking place in the books of account. Now source document or vouchers, this is very important. Your topic basically, this topic deals with all the numericals. Now we are going to very soon start how the numericals are recorded in the books of accounts. The first thing which we have to keep in mind is the description of vouchers. Voucher is, in simple words, when I say you go to market, purchase a dress for yourself, right? Right? You go to the cash counter of that particular shop, pay the money. What do you get in return? Can anybody tell? Yes, bill. Right? When you pay the cash at the money counter, what is given to you in exchange? A bill is given. This bill is voucher. So voucher is the evidence of the transaction. Okay? So whenever any transaction is taking place, some evidence, some document we have to keep with us, right? So that evidence is the voucher. This voucher can be any bill, even the salary. I am doing job, I am getting salary every month. So what I am given by my boss? The salary slip. So this is also a voucher because it is telling me the description of my salary. I am giving my services to a company and that particular company is giving me salary, for which it is keeping an evidence that yes, we have paid salary to this employee and I also have the evidence with me that I am getting the salary. So this is also a kind of voucher. So whatever proof of the paper which we have with us, which tells that yes, a particular transaction has taken place, is called a voucher. Now, although not in very detail, but yes, we may require the important elements which a voucher should have, right? So the different characteristics of voucher, which while preparing notes for this chapter, for preparing for the theoretical part, it is very important that what are the elements of voucher, means what elements of voucher are required, means when a voucher is called to be a proper voucher, what elements should be taken into consideration. So elements of vouchers are, it is not any fixed rule that what color of voucher or what it should be. It should be written in a good quality of paper. So quality of paper should be good. The first thing. It should not be a kind of paper which can easily be torn or which is of a very bad quality. So quality of paper should be good. This is the first element of voucher. Second is that name of the firm must be printed. You might have noticed whenever you go to any shopping center, whenever you go to a shop, the name of the shop is always written at the top of the bill. So name of the company should be printed so that you come it is an evidence with you also as a customer, and the company also has an evidence that this transaction or the money dealing has been done by the company. So it should be printed. Then next comes that the date of transaction is filled up against the date. So date should be mentioned. Should be mentioned. If many transactions are done, then date should be mentioned on the day when the voucher is being prepared. Not for each transaction, the date should not be separately maintained. There are companies who have different dealings. Suppose there is a customer who comes to buy the raw material from a manufacturer. So manufacturer is giving paint today, giving the boxes tomorrow, brush is giving day after tomorrow. So whole voucher is prepared together. So it is not important that he is writing for each day. He can together, suppose preparing the voucher after 4 days. So he can mention the date of that particular fourth day. It is not important that for second, third, all days it should be written. So a combined voucher can be given. Now number of voucher means is the serial number or the sequence. So number of voucher should be written according to serial order. According to serial order. These things you can keep on writing while preparing the notes for this chapter. It is going to help you to score well during exams, because lots of theory questions can come from anywhere. Nowadays, lots of MCQs are also coming. So these things you have to keep in mind, that what kind of question can be asked. Then name of the account should be mentioned. Right now I'll show you the format of the voucher also. Name of the account is to be mentioned. Then next we come to debit and credit amount is to be written in figures. For debit we write short form DR, and for credit we write short form as CR. So most of the books of accounts you will notice this DR and CR. Not completely, but yes, the short forms are used. Debit and credit is written in figures. Figures means numbers. The next point comes, the description of transaction is to be given. We have to mention what kind of transaction is taking place. So description has to be mentioned. The person who prepares, suppose I am preparing, so person preparing should write the name and sign. And at the end, the authorized person should also be mentioned. Sign is taken, then it will be well and good. If the authorized person is not available, then the name should be mentioned. So these are the important elements of the voucher which have to be taken into consideration. Just a rough format of the voucher, although it is not fixed. Many companies have their own formats of vouchers, but generally a voucher shows all the important details. We use debit and credit. Yes, credit is what? The amount which we are going to receive, and debit is what? Which we are going to give. So the voucher is generally in this format. It can be asked that what is the format of the voucher. So you should be clear. The first thing which should be printed at the top of the voucher is name of the firm, which I had asked you to write in the points. Name of the firm can be mentioned at the top. Then we give at the left hand side the voucher number. Voucher number is the serial number. Then we give the date. Right? So after date comes, we have to be proficient in making the different tables. Serial number. Then we can give any kind of code for the transaction which we are doing. Code. Then after code we have to mention the account name. Account name is the name of the person or what kind of account it is, whether it is asset, whether it is liability, or it is a name of any trader, anything, whatever it is, it should be mentioned. Then it is amount. How much is the amount? Then at the end we can refer to the narration. Narration means goods sold, goods purchased, or whatever it is. So this is the general format which is followed for debit as well as credit account. Now in detail you will come to know about all these things. The another very important thing which this chapter has after this brief introduction of the vouchers, because vouchers are used in different ways by different companies, right? So let us now move on to the accounting equation, which is very important part of your learning of making of the balance sheet. See children, whenever any company is there, the company maintains its final account, right? So the company has to make certain books of account at the end of financial year. What is financial year? I already told you. Financial year is generally starting from April to March, or certain companies follow it from January to December. Now the companies which are following from April to March, they also have the same way of recording the transaction, and on the other hand from January to December also have the same pattern. So there are certain books of accounts which are prepared. In that the most important role is played by balance sheet. Balance sheet is, as the name says, it is balance of liabilities and assets. First of all, these terms should be clear to you. Liabilities means the money we have to pay or we are liable to pay. Assets are our, as you use in your normal English also, assets are the total what we can say, cash or goods or money in market, means which you are going to get very soon. So these all things are make up your assets and these are liabilities. Now a company is said to be successful only when these two are equal, right? So learn this rule. A company is successful when liabilities and assets are equal. The accounting equation now is a very important term which you have to keep in mind, that accounting equation tells the relationship of balance sheets most important terms, that is liabilities and assets. So accounting equation is also called balance sheet equation. So in exam if they ask you what is the balance sheet equation, don't get confused, it is the other name of accounting equation. So balance sheet equation depicts the fundamental relation between components of balance sheet. Now with liabilities we have capital also. Please remember, what is a capital? Learn this. If I am a proprietor, I have 2 lakh rupees with me. I put up those 2 lakh rupees, invest in a firm, and I start my own business. So that is the capital which I have invested. So I am liable to get back my capital if I am in a plan to close that firm, right? So it is the, you can say, money of the investor or the owner, right? Money of the investor or owner, it is capital plus liabilities are, I have already explained you, they both are equal to assets. Assets are also explained to you. Assets are the list of assets which the business entity owns. So whatever assets the business entity has, they should be equal to liabilities and capital. Now balance sheet format, in short, please see that in balance sheet liabilities are written over here, then we write the amount. Over here we have assets, then we wrote the amount. So whatever will be the value, we will be writing it this way. First of all, learn this, keep this thing in mind that liabilities come to the left hand side and assets come to the right hand side. Slowly, a final accounts preparation chapter, you will understand about this in detail. But right now you should understand that why are we preparing the accounting equation, right? So in your book, please see page number, the first example which is given to you. For example, page number is 51. Rohit started business with a capital of 5 lakh, right? From the accounting point of view, the resources of this business entity in the form of cash 5 lakh. Sources of this business entity is the contribution of Rohit 5 lakh as capital in the form of equity of resources. Okay. So now what they are taking into consideration, that a business is started with the whole and sole purpose of earning the profit. Obviously every businessman works with the same motive. So let us see how example 1 we are going to calculate and understand how the amount has come. In your book the detailed calculation is not shown, but I am going to tell you for each point what transaction is affecting which part of the balance sheet. Let us see this. So please come to example 1 on page number 51. Open a bank account in State Bank of India with an amount of 4,80,000. So we have to make different points. First of all, let us see the first point which is given is open a bank account. So we will make different points for everything. Bank account has 4,80,000. Now if in the bank it is there, and previously it is told to you that capital was of 5 lakh. So we have capital as 5 lakh. You see these all things in different points, right? Third, when capital is brought into the business, means cash is also increased, right? So cash is also 5 lakh, right? Now it is said open a bank account instead of with around 4,80,000 means cash is reduced to 4,80,000, right? So we are left with only 20,000. So cash is left how much? 20,000, and bank is increased to 4,80,000. Bought furniture for 60,000 and check was issued on the same day. So furniture is bought for rupees 60,000 means check is issued, right? So check is issued from bank. So less 60,000. So it comes to 4,20,000. Right? For furniture. Now next point what we have got? We have got furniture for how much? 60,000. Right? Next comes bought plant and machinery for the business for 1,25,000 and an advance of 10,000 is in cash is paid to Mr. Ramji Lal. See, now you see plant and machinery is purchased for 1,25,000. So next thing which is added with me is plant and machinery. Let us write it at first. 1,25,000. For this, 10,000 is paid to Ramjilal, right? So cash is again reduced by 10,000. So how much cash is left with me? 10,000, right? Now Ramjilal, I have to pay him how much? 1,15,000, right? So Ramjilal, I have to pay 1,15,000. So Ramjilal is who? Ramjilal is my creditor. So let us write Ramjilal 1,25,000 minus 10,000 paid, right? So Ramjilal is 1,15,000. Then after this we come to the next transaction. Goods purchased from Mr. Sumit Traders for rupees 55,000. So Sumit Traders is again our creditor because I have to pay him money, right? No one will give me free of cost. So Sumit Traders is for 55,000. So we can see that our creditors come to 1,70,000. And what is being purchased? Goods are purchased from him. So it is for 55,000. Goods should also be written. Goods I have got for 55,000. Now next, goods costing 25,000 sold to Rajni Enterprise for 35,000. Means 25,000 thing if I am selling in 35,000, then how much profit am I getting? 10,000. So always remember, profit is added to capital. Profit is added to capital. Now goods costing 25,000 sold. So it means 25,000 is sold. So how much goods are left with us? For 30,000. Okay. So goods are left with us of 30,000. Now you all can see in your book how the balance sheet is prepared. On liabilities side you can see creditors as 1,70,000, capital as 5,10,000, then cash, which what is the balance of the cash left with you? Yes, cash is 10,000. Then bank is left with 4,20,000. Then debtors are equal to 35,000. Where did I write debtors? Okay, I did not mention about Rajni Enterprises. That is to be written. $35,000 Rajni Enterprises, because I'll get money from them, right? So now 35,000 are our debtors. Then we have stock of 30,000. Where is the stock? Yes, this is goods or stock. This is the same thing. So we have stock of 30,000. Then furniture we have of 60,000, and plant and machinery we have of 1,25,000. This is a very simple example, but yes, this calculation is not given in your textbook. So you should be aware that how the amount which is written in assets and liabilities side, how it is derived. This is the way how each transaction has double effect. This thing, if you understand the logic behind it, then it will be very easy for you to prepare the balance sheet. And I am telling you, it is very simple, not at all a difficult concept, right? So bank account, whenever anything is purchased using the check, you have to deduct the bank account. Whenever you have the profit, you have to add it in the profit in the capital. Whenever any cash transaction is done, then keep on deducting it from the cash you have in your hand. Assets are written over here. Later you will study about depreciation also. Creditors are the people who are going to pay us. So we sold, we actually bought the things from them, so we have to pay. Sorry, creditors are not the people we have to, the people we have to pay the money. Sorry for the confusion. So creditors we have to pay the money, and debtors are those who are going to give us money. So debtors are our assets while creditors are our liabilities. I hope this video is quite clear to you. This is the part 1 of recording of transaction. I wanted to make everything clear, that is why I am not made this video in a hurry. I want you to first understand the logic behind each thing which is entered in the balance sheet. Then we will be moving further. I hope you like this video. Kindly like, share and subscribe my channel. The more likes you give, the more motivation it gives. Thank you. Bye.